Hello everyone. So what are financial statements? Financial statements are written records that convey the business activities and the financial performance of a company. Financial statements are often audited by government agencies, accountants, firms, etc. to ensure accuracy and for tax, financing or investing purpose. So there are three major financial statements. First one is balance sheet, second one is income statement, and the third one is cash flow statement. So let's have a look at the balance sheet first. So balance sheet is also referred to as the statement of financial position. A company's balance sheet provides information on what the company is worth from a book value perspective. The balance sheet is broken into three categories and provides summation of the company's assets, liabilities, and shareholders' equity on a specific date. There are a variety of ratios analysts use to gauge the efficiency of a company's balance sheet. Some of the most common include asset turnover, the quick ratio, receivable turnover, days to sales, debt to asset, and debt to equity. The next one is the income statement. A company's income statement provides details on the revenue a company earns and the expenses involved in its operating activities. Overall, it provides more granular detail on the holistic operating activities of a company. Broadly, the income statement shows the direct, indirect, and capital expenses a company incurs. Starting with direct, the top line reports the level of revenue a company earned over a specific time frame. It then shows the expenses directly related to earning that revenue. Direct expenses are generally grouped into cost of goods sold or cost of sales, which represents direct wholesale costs. Cost of sales are subtracted from revenue to arrive at gross profit. So gross profit is then often analyzed in comparison to total sales to identify a company's gross profit margin. Now, the next one is cash flow statement. The cash flow statement provides a view of a company's overall liquidity by showing cash transaction activities. It reports all cash inflows and outflows over the course of an accounting period with a summation of the total cash available. Standard cash flow statements will be broken into three parts: operating, investing, and financing. This financial statement highlights the net increase and decrease in the total cash in each of these three areas. Now, uses of financial statement. It bridges the gap in management. Financial statement basically reflect a company's financial performance. Second one is availing credit from lenders. Every business needs to borrow funds for functioning. And the last one is useful for stock traders. Financial statements help stock traders with the knowledge of the situation the company is in and therefore adjusting their quotes accordingly. Now let's have a look at the limitations of the financial statement. First one is financial statements do not contain some intangible assets. Second one is financial statement could be wrong due to fraud. And the last one is financial statements only cover a specific period of time. So that's all for this one. Thank you.